Welcome, everyone. My name is Torres Legend. Thank you so much for joining us in our ongoing BTP Customer Value Network series, Improve Results with Integrated Financial Applications. We have a great agenda lined up for you today. My colleagues, Michelle Hansendonks, Global Solution Owner for FP&A, SAP SE. My colleague, Floyd Conrad, Vice President, Global Center of Excellence at SAP BTP Cloud Advisory, and Elizabeth Milne, Senior Director at SAP Senior Director SAP S/4HANA Finance Center of Excellence in SAP Americas, will present to us the challenges facing the finance department as a session, and then following that session, we'll have a session around conversation with the experts, partners talking with customers and their implementations and what was successful, what is the benefit you as a customer get, what is the impact of using business content, pre-built accelerators, analysis of what was shared, S/4HANA, S/4 Finance, financial planning. Before we get started, I just have a couple of upcoming events notices. We have our ongoing 12-episode series, live YouTube streaming, the Universe of SAP BTP Technology Platform in a nutshell. Following that, we have on November the 3rd, we have the European version of what we're going to be presenting today. On November the 8th, we have the customer evolution of SAP process orchestration to SAP integration suite. So if you're interested in any of these other webinars, please do reach out and I will send you the links. For those in the Chicago area, on November the 10th, we have our on-site event. If you want to get one-on-one information on our with our topic experts, we have our session, SAP Business Technology Platform Customer Forum in Chicago. As part of the Customer Value Network, you're all plugged into the SAP Garage series as well. Our next episode is actually tomorrow, episode 11, Develop Extensions for SAP S/4HANA with SAP BTP in the ABAP environment. So this will be held in both of our the main time zones. The SAP Garage series basically gives you a little bit more hands-on enablement and expert guidance. Each of the episodes is focusing on one SAP Discovery Center mission. So if you're interested, please do reach out and let us know that I'll send you the link. With that, I'll hand it over to Michelle. Michelle.
All right. Thank you very much, Doris. And let's say, well, happy to be there in this virtual session, and especially happy to, let's say, to have Elizabeth, Floyd, and also Jeff Hattendorf from Microspect, let's say, online. As Doris already mentioned, the idea of today is to discuss, let's say, how we can support finance professionals in their current challenges, which they're facing on a day-to-day basis with, let's say, our integrated financial applications, or how I personally like to call it, our let's say modular finance platform. But yeah, let's say, well, we'll get into some questions. But before going there, and before, let's say, shooting some questions to let's say Elizabeth, Floyd, and Jeff, I'd like to basically, well, give a little intro on, let's say, okay, what those challenges are. And I think, let's say, the last 3 years have learned everybody, I guess, around the world with the pandemic, the war, what we recently are, well, like see in terms of inflation for certain parts of the world, the increasing energy prices, for instance, the area where I live in, out of Europe. Definitely something is basically that, let's say, companies are trying to change their way of acting by, like, on the commercial side, changing their business models, changing the way they go to market, moving from product oriented to service oriented approaches as one example, but definitely not. And this is, by the way, an evolution which has been going on before as well. But I think, let's say, what we've all felt like from a professional and definitely also a lot of us in our private life is basically the breaks in the supply chain. So basically the adaptation that we need to get to in terms of supply chain approach is definitely important as well, not only from a global finance perspective, but also from a tax perspective, and even, let's say, from a sustainability perspective, which I think is also becoming higher and higher on the agenda, which is a very interesting additional dimension we see basically appearing on the agenda of finance professionals at companies of any size, basically. Now, let's say, in order to address these and other challenges, of course, because this is just a kind of a small glimpse, I think, well, there's more and more pressure on the role of FP&A, of finance professionals, and especially FP&A professionals, which are, let's say, looked at more than ever before as being the business partner for the rest of the organization to ensure that they support, let's say, the rest of the organization in making it possible to take effective decisions in a quick and timely manner. And let's see, in order to do that, let's say, I think we probably all agree, but we'll hear about that more later on. Let's say well, that it's more and more important to look ahead more than ever before, and potentially in different ways. And actually, talking about, let's say, looking ahead, and let's say in view of, let's say, the changing role of FP&A professionals, let me throw one first question into the group, and perhaps, let's say, addressing this to Floyd more specifically with his let's say, with his vast planning background. Let's say, Floyd, how do you see this as an impact in the way, let's say, to budget, let's say, the evolution of the market, the evolution of the role, the speed at which we need to, let's say, get information. So how do you see this as an impact on, let's say, on how the way companies should or are budgeting or are requesting software support to budget in different ways? We hear about XP&A, but actually, well, is this really fundamentally new or not? What's your take at it? Can you comment, please, Floyd?
Floyd, you're on mute.
Oh.
You know, that's because I have tree trimmers coming, and I didn't want the noise to get too dialed.
Okay, no problem, Floyd.
Yeah,
yeah. But yeah,
yeah.
I hope you're fine to react.
All right. So if you see that I'm not like staring directly at you, because I have two monitors, and the one that's shooting the video is actually the one I'm not looking at. So so I'll try to look at this one, but I see Elizabeth over there on my corner of my eye. So I've actually been, I graduated in December of '88 from Texas A&M University, and I've been in accounting and finance since then, basically working with either in the departments or when I made the transition into the software world. That's been 20 some odd years now. You know, it's really, you know, especially on the planning side, you know, we've talked about, you know, we've called it different things, right? So we've talked about, like, you know, just operational planning. We've talked about, you know, integrational planning or integrated business planning, which we confused everybody, because if you're in the, you know, manufacturing world, that is a very distinct term. So I hated that term because I actually worked with customers who, you know, really needed true integrated business planning in that respect. Then we called it enterprise planning management. So I used to work for Hyperion and then Oracle. And if you would ask Hyperion, they claimed to have created that space, enterprise performance management. They're no longer there. They got acquired by Oracle. I don't know what Oracle claims now, but I've been at SAP now for 10 years. Time flies when you're having fun. But yeah, I mean, we've talked about the concept of, you know, connecting planning with the operations, right, or across the organization. But the problem is, or the single version of the truth, you know, that's the first thing that when I started with in the software industry, like at Hyperion, you know, we always talked about single version of the truth. At the time, that was S-based, right? And everybody knows you really can't load all your data into S-base, right? It's great for reporting, but it has to be at an aggregate level. And if you change something, how does that information get back? Or if you need to drill into it, how do you get into the detail? Well, you have to go into a different system, right? And I think now what's the pivotal change is that we actually have a platform in place, and that's part of the team. If you notice in the introduction, I'm part of the business technology platform team, but I focus on planning and analytics, right? So I have that specialty around that piece, but really it's that platform that we have in place. I'm talking with my hands. I'm half Latin, so I have to talk with my hands. So, with that platform in place, you definitely, it gives you that opportunity now to actually do it, right? So last week I was at the FP&A Trends Board meeting that we have them in different regions. For some reason I've been tagged with DC. I live in Dallas, so it's not really that close, but it was nice because I had been to the prior one and I saw a lot of the same executives. We have basically the C-levels, or the senior, finance managers that are part of that team. And, we talked about it. We had roundtables. Where are you in this progression of, say, financial planning to, what we're calling extended, planning. So that whole conversation kind of goes like, well, we're trying to get there, but, the challenge is really getting that buy-in from your peers, right? So we had a CFO that, talking about, well, I have to get with HR, our systems aren't necessarily connected yet, but, we're trying to get there, but how do we do it? So I think that's where we as SAP can help you guys, and with our partners like Macrospec, who are actually out there implementing it. So I'm sales support. So, I know the software, I can demo the software, but I'm not the person who's actually implementing it. So, that's Jeff over here on my right side.
Right. So
normally I look up and down to you.
Actually, that's like what I hear. Let's say in what you're saying, Floyd, is actually like FP&A is kind of the new buzzword of which is replacing driver-based planning or connected planning or integrated planning. Let's say, and actually the difference, if I summarize, is let's say with what we had like 10 years ago or something, is basically that now the technology has basically changed dramatically in, let's say, with the platform that we provide, in order to basically really make it real this time. And
the one thing I didn't mention really is also the close process, right? Part of the planning, especially when you're doing forecasting, right? I need the latest actuals, the latest consolidated results, right? And to be able to have that real-time consolidation, it's you never could do that, because I used to be part of accounting for a retail company. I was a corporate controller. I was also a regional controller. It took us weeks to close the books. But then again, that was in the 90s too. So
I'd like to let's say to come back to that point, actually, because it was turning around in my head. Now, before going there, actually, you were also referring to Jeff, who is also with us on the call, which is great. And actually, in terms of the technology platform from a planning perspective, what one of the things I heard from you, and which we also hear all over the place, is that basically there is this need to act fast, to go quicker than ever before, to move from classic budgeting to simulation and scenario building and so on and so forth. So
yeah, we haven't even talked about the tools that are in that platform, right? So the ability to do artificial intelligence, right? One of the things with like strategic planning, I think that will really play a good role, because I can now progress out and look at things, a little bit more detail out to the future, and using key drivers and stuff like that. But with artificial intelligence, you can even make it even better.
Yeah. So Jeff, let's say with you actually being the one of the people who's very experienced in, let's say, implementing this, let's say, what's your take at, let's say, how technology and how the world is changing in terms of, for instance, AI and predictions and so on. And can you shed some light on that for us from your perspective, please?
Yeah, certainly. We find that clients, and the CFO that was being mentioned by Floyd is right. This has been around for a long time. The difference is kind of like the microwave oven in the late 70s, early 80s, changed how fast food could be made. In-memory technology changed how quickly we can access data. But when it was first new, things just went faster. We didn't access more detail. We didn't dig into anything. We just, the screen refreshed faster. Fast forward 8-9 years since in-memory became a buzzword and a talking point. And now we're at a place where if you choose to make the investments, organizations can begin to pull in all kinds of very detailed operational data. FP&A team, the accounting team, when they do their reporting, is still going to be at a summary level, but we have the ability to drive way deep into the details and let those details drive up into those numbers. And even more powerfully than that, we can apply AI. And while AI is still relatively new, the statistical modeling and the way the machine learning takes into account the data, it looks at the details that we can't see as people. There's a couple of statistics on data. So organizations collect all kinds of data. 80% of that data remains dark or completely unused. It's locked up in spreadsheets or databases and transaction systems because we don't have the investments made to pull that into our planning and analytics processes. So to me, we're on the cusp of a revolution, but there still has to be some evolution to get to that point because the tools have to be invested in. I'm still surprised at the number of clients we come across where the detailed operational planning, where they're doing their cross-functional operational piece is being done in Excel and then dumped into one of the planning tools. It's almost generational. Gen X and baby boomers really love Excel. And that's fast for us because we can do a lot of magical things in Excel. My eldest is a college junior, and between her generation and Gen X, that generation seems more open to web-based interfaces and the new technologies because they've grown up with cell phones. Everything's on their phone or a tablet.
Right. I had somebody ask me what the DVDs were the other day. What are all these? They're like, what? Because I had all these old movie DVDs, and they're like, what are those? I go, that's how we used to watch movies. We used to go buy the DVD and stick it in the DVD player.
Yeah, well, what's the term they say that there's digital natives and digital immigrants. So, right. So our Gen X, we're the digital immigrants, and we didn't grow up with all of this stuff. So I think that the user interface and just the expectations of what technology can do. I've also, unfortunately or fortunately, been around for about 20 plus years. And when I started in software, I was working as an accountant before I moved into software about 20 years ago. But Floyd, you had mentioned this, the concept of enterprise performance management was a necessary technology based on before we had the in-memory that Jeff was talking about, right? Like you had SQL databases and you didn't have the capacity to have that level of detail that Jeff was talking to. So whether or not you're talking about planning or to Floyd's point of consolidation, because you need the actuals in order to create the plan, right? And so it used to be that you had to take it, you had to summarize it and put it into, a separate planning or a separate consolidation tool. But today with the in-memory technology, you actually have that capability to be able to have that lowest level of detail all in one in-memory system in order to have that capability to drill down, which we have before. And what I find fascinating about it now is that the art of what's possible is what Jeff, you were saying, is that we're like right on this cusp of all of a sudden people are going to realize that you can do so much more now that you're not limited by the technology of 20 years ago. But it is still shocking and surprising to see the amount of people who are just dumping it into Excel still, right?
Well, we hold on to things that we know and trust, and most senior analysts and VPs and directors in the FP&A department, in the accounting department, we know Excel. And so when the tools don't exist somewhere else, I'm going right back to Excel and doing my very granular data. We've got a client that the investment in new tools caused some fear, uncertainty, and doubt, created some FUD in the organization because a lot of people felt their job security was tied to their knowledge of the Excel. When in reality, their value is their knowledge of the business and the process and understanding how that data actually matters in the planning and analytics of why did we have performance that was exceeded expectations, or we didn't hit expectations. The Excel is not the value; it's the tool. Yeah, and one of the put better tools in place.
And the one thing I'd add to that is that really we should be using Excel more like as a window into the application, right? Not as the application. Not creating the logic, not creating the rules and stuff like that, because that's where that single version of the truth fails, right? So if I start sitting there and they say, go, define operation efficiency rate, Elizabeth may come up with a different term that I might come up with in accounting and in finance. And she's in accounting now, but she supports that group with group reporting. I support planning. So it's important. If you have a KPI or something that you're tracking, you want it to be part of that application. You want it to be consistent, regardless if it's accounting or finance, or you're sitting in HR or whatever, depending on what that KPI is related to. Or metric.
I think one of the interesting things too is that I can remember, when I first started in software, that I would very often poll my audience and say, who's in finance and who's in IT. And now today, to Jeff's point, with this new generation that's out there, that you're not a finance person or a technology person, you're both. I mean, and the majority of people in today's world, you have to be both, right? Yeah. So it's a matter of being able to leverage those tools in order to become a better accountant. So you're not an Excel jockey. That's not your job as an accountant, is to sit there and create spreadsheets and write macros and, be this like super, what now you actually, as I think Floyd was talking about, it being a partner with the business, right? As an accountant and actually being an accountant and not being that Excel jockey.
Right. So basically what I hear is, let's say, well, the tooling is there, the technology is there, but let's say not everybody's necessarily already adopting this. One of the things which I hear a lot is when we talk about AI and prediction and stuff like that, is basically that people, and especially finance professionals, are very good at trying to push it away, because they say, well, it's a black box. We don't really understand the rules of the game. We don't know how basically things are being derived. So how do you tackle that? Because I think it's about, let's say, also a lot of change in people's minds. Let's say that needs to happen. So maybe Jeff as a first one, perhaps, but like Elizabeth, Floyd, feel free to also jump in.
Well, and there's a question in the chat, if you don't mind, if I can address that just quickly.
Oh, sure.
So the question is, clarify if we have the ability to combine operational planning, financial planning together in a forecasting process. And the answer is absolutely yes. So we have clients today that use predictive components or AI to drive operational data, and that operational data then drives, based upon a variety of factors, the financial forecast. You can source those operational data sets from manufacturing systems, point of sale systems. Whether if you're in retail, you can pull it from the point of sale at the farthest end and feed that back into your supply chain. If you're in entertainment, we've got media clients. They're using point of sale to understand ticket sales or licensing revenues, and they're looking at trends. All of that is being used to drive that very detailed granular data, the summary financials that we then look at as a business. And the system is going to be able to look at data much more granularly than we can as human beings and understand it and show us patterns. And then we apply our intelligence on top of that. It's something that I don't say this lightly. I truly believe that in-memory technology was the microwave oven, and everything got better and faster from a cooking standpoint. But when we first had it, first microwave oven, all we did was make popcorn. Now you can cook whole meals in the microwave. And we've even evolved past that to where we have better tools than a microwave oven, but everyone's got one in their home, at least here in the US, because they're convenient and they're fast, and we can do lots of things with them. In the world of FP&A, as the accounting process ends, we get into our analytics. We're using that very detailed driver-based data, both that tied to the actuals, and I can drill into the lowest level of my actuals at a document level, like an actual invoice, and see where my variances are being driven. It's a different world. So the technology is finally living up to the marketing hype that we've had for about 20 years around integrated financial planning and all the other names that it's had. Yeah.
And I think the forecast is probably the key area that's really important. And, the annual plan, I think, should go away eventually. It should just be a continuous rolling forecast. I know we need to set some kind of number for compensation, because a lot of people get comped on, the annual number. But, I think that also drives the wrong behavior, because what if you make your annual number in Q2, Would you sit around for 2 months? You know, you
Well,
still want to be able to, you know.
About 2004, I think it was, Warren Buffett had an article attributed to him where he said that the corporate budgeting process is the single largest waste of resource in any organization in the world. And I referenced that with one of the companies, their FP&A team that he owns, and they laughed and they go, well, he wants to see one. But what he really believes in is the forecasting process, because forecasting the business is important. If you look at all the things that have happened to us just as a world since 2020, we've had global pandemic that shuts down the world for the better part of a year. We've had supply chain issues that linger today. We have microchip issues where there are cars just waiting to have microchips so they can be actually sold, because you can't drive it without the computer chips in them. We've got war in Eastern Europe that's driving up inflation and oil prices. If you don't have the ability to simulate those things and forecast quickly, you can't react, and you're going to get left behind or make bad decisions. And what this speed gives us with lots of this detail is the ability to do 3, 4, 5, 100 different versions. If you look at some of the different vendors and studies about the number of iterations that organizations were doing during COVID, they were in the hundreds of forecasts. You couldn't have done that 10 years ago. And it's tools like SAC, Analytics and Planning components, with HANA underneath it, that enabled this to happen. It's been a game changer.
Yeah, I mean, I can't even imagine, like, when I was in finance, to be able to say, okay, I got to go ask so-and-so because I want some new sales information, right? I have to get a file, run it in Excel, get whatever I wanted to, right? Now I can go create my own scenario in SAC, pick the information, what the drivers are, pull it from, you know, that sales operational information, and see a result immediately. You know, I can put the time, well, immediately is depending on how far I go in the time. Sometimes it takes a little, you know, a couple minutes, but, you know, if I'm going out 2-3 years, but if you're just trying to plan the next, you know, 3 months of what it's going to look like, it's pretty quick.
Well, and if you've designed the model properly, you can tell the system, go generate a forecast for me.
Yeah.
Take that detailed data and tell me what
Yeah.
you think the numbers are going to be, just using the AI components of the tool set. And we've all seen Terminator and Space Odyssey 2000, all the movies where the computers take over. And that may happen someday. But right now, what they're doing is they're giving us good
I
numbers.
think they have.
It probably did. But so people still don't want to trust those numbers. And so the best processes that I've seen so far are where we use those tools to drive granular data into financial forecasts and allow people to come back over the top and apply what we can do that the computers can't. It's the experience that we have, and I'm not spending my time writing another macro, or worse, linking spreadsheets. Linking spreadsheets has got to be the bane of most FP&A for people's existence if they're still doing that.
Yeah. But also
your microwave comment there, Jeff, right? and I see a question in the chat there, right? Is it, what is the technology that we've all mentioned in memory a few times? We mentioned HANA in memory. So there's SAP S for HANA, and then in addition to that, you've got SAC, the SAP Analytics Cloud tool. And what's also, we mentioned actuals, and then within SAP S for HANA, there's the group reporting functionality. And again, what's different about that compared to the EPM solutions of the past, right, is that group reporting functionality is consolidation functionality in the ERP system. So S for HANA is the platform, and then SAC has the SAP Analytics Cloud. It has real-time connectivity. So not all of the data, not all of that actual data needs to be replicated into the planning system, right?
But
so,
I can drill back into group reporting and see the actual transactions, the journal entries, or the transactions that actually made up the balance, which, you know, before, could I do that when I was at Hyperion with S-Base? It was a lot of work and a lot of engineering to get that drilled back to it. And it wasn't real time either. It was just basically from a point in time, you know, you could actually get to it. And now you can
those took hours, routines took overnight or days sometimes, if you're doing any kind of complicated calculations.
Now,
I mean, that's the whole concept of a batch process, right? I mean, with today's technology, you can do that throughout the period instead of, you know, being limited by the technology. And that's literally the way that it used to, you know, you were limited by your technology. And today, in today's world, again, it's really all about the art of the possible. And I mean, we've been talking about technology, but it's really all about, you know, people, process, and technology. And the technology is just the enabler part of it. And It's being able to really think about it. Okay, well, now that I can do this, how can I do things differently, right? If I'm not limited by, okay, I only get my actuals 2 to 3 weeks after the end of the period, right? I mean, what if I can look at them throughout the period and get that better access without having to run those batch processes and having everything happen in real time? And, how can I do things differently? How can I forecast better? How can I steer the business and really make decisions and partner with the organization to drive the business in better directions because I have better information?
So true.
So Elizabeth, let's say, just listening to what you were saying here, let's say, well, a lot of things, because basically a lot of great ideas and elements are flying around, let's say, throughout. Like, I see also a new question in the chat. I'll get back to that right away. But just basically to hook up first on one of the elements that you were saying in terms of, let's say, quicker decision making, let's say, really steering the business, having the need for actuals, let's say, in a timely manner. Could you double click on that? Because let's say there was the question, okay, in the chat also, let's say, what's the tool for planning? Well, that's SAC with the predictive capabilities included. And there was a follow-up question. Yes, it can be basically used standalone. But of course, the interesting thing in the approach that SAP, let's say, offers today, based on what you were saying, is basically that we really can intersect or interconnect S/4HANA and SAC in order to basically have this real-time access to actuals, if I understood it correctly. So could you double click on that and have a deeper look into that, and whether it's only on entity level or also available on, let's say, group level? Because I heard you talk about consolidation. So can you clarify that a little more?
Yeah, absolutely. So the concept of continuous accounting is a term that people have been using over the past 5 or so years. And the concept there is that now that I have this technology, now I have the in-memory, like a platform such as S4, that I can do things throughout the period. I mentioned before talking about batch processes. So it used to be that you would have to extract your information, summarize it, and put it into a consolidation system. Now within the group reporting functionality, actually there isn't a consolidation system. It is your ERP system that you run a consolidation on. So there's no batch process to be able to say, okay, I need to pull this information out and then run it. It's just actually running that consolidation. Now, as an accountant, we all know that if you're going to run a consolidation on day 10, I'm not going to get a complete picture, right? I mean, you draw a line in the sand and you run your actuals. So, but the fun part about it is that you can pick and choose different accounts that, flash reporting is also a concept that, a lot of accountants like to talk about, is just being able to look at the data throughout the period and do things such as like intercompany reconciliation, for example, rather than waiting for corporate to say, okay, everybody, here's where your out of balances are, and you have to wait for corporate to tell you that. You can actually go into an S4 system, go into that in-memory system, and start reconciling it and run an intercompany report at any point during the period, so that you're not constrained by the technology anymore. It's really, again, you mentioned real time, and it's actually real time now. I can tell you, I mean, 20 years ago, it was near real time, because I can extract and I can reload and reload whenever I feel like it. But now you're not actually loading anything. You're actually hitting directly onto that transaction data that Jeff had talked about, getting down to the document level. And again, it's either at the actual level or the plan level that you have the capability to look at the actual invoice. So that variance analysis, you have that information real time in order to analyze it whenever you want, right? You don't have to just wait until the end of the period, or, I mean, it's so, while, my background and expertise is definitely for sure on the consolidation and the actual reporting. But I mean, we were talking the other day when we were getting ready for this conversation about, certain companies having a 6-month budget process, right? I mean, how can you spend your whole...
I had an 18-month budget process when I was at a financial services company, so 6 months sounds great.
But I don't know, Jeff, if you want to double click on that one a little bit more on the, the amount of time it takes to create a plan.
Well, that's kind of a loaded question or loaded statement. So it's not one size fits all.
It depends, yeah.
And I'm a consultant, so you're going to get some consulting answers because it does depend. However,
Right.
if you haven't made the investment in the tools, and with the modern tools, we're not limited to a couple of sets of data. We have a client today that is pulling machine hours and machine runtime information into their financial planning process. They used to dump that into Excel, and then Excel would dump it into another system for rolling up the financials. That process, I believe, took them about 4 months to do a budget.
Wow.
They're within 30 days of doing a budget now, start to finish. And that's with lots of very granular data. If you have taken the time to do integration and you're working off a data lake or a data warehouse in the cloud where we're not replicating all that data, but we're referencing it into our processes, you can begin to train those models. And that's a process that varies by client and process, but you can run that in a matter of hours or minutes. That's a machine-driven forecast, but it's a baseline that you can then go measure yourself against. And ironically, I mentioned earlier that we as people don't like to trust the machines, but in our clients who have done that, the calculated forecasts tend to be more accurate than the human-driven forecasts, except where we have things like a COVID event or a supply chain event, because that anomaly, that event doesn't exist in the data set. So the system can't see that because it's never existed before, or it's too much of a one-off. The other thing that the tool's really good at that makes this process go faster, one of the things that our clients have always complained about, we write lots of reports to look for exceptions, whether it's in the consolidations and close process or it's in the FP&A process. The tools can now look at the data and they can highlight for you outliers or anomalies. And sometimes those are just somebody typed an extra zero. Sometimes it's a real change in the data set that you need to go look at and investigate, whether that's coming out of actuals, that's part of the forecast process. So it's been a revolutionary change. Coming back to the very first thing we talked about is, yeah, it's been talked about for a long time. As long as I've been in this industry, we've talked about this idea of integrated planning or cross-functional planning, but the tools now make it real.
If I'm, let's say, Jeff, let's say just so hooking into, let's say, what you were just saying at the end, let's say, well, with the, let's say, the power of AI and predictive models, and let's say, and of course that we need to get used to, let's say, to look into it, and the machine can basically, let's say, detect a lot more than we could ever do as a human being. Now, there was an interesting question in the chat before, which I think is related to this, which is all about, let's say, okay, how long we need to train, let's say, the system to use predictive forecasts. I think that's a pretty interesting question, let's say. So do you want to comment on that, or Floyd?
I'll give a short answer and let Floyd dig into it, because in practice, we have clients that are using the predictive components to drive parts of the forecast. And we have a couple that are moving towards, and these are big companies, brand names that you've heard of, but I don't want to mention names and cause anybody any problems, but they're leading edge. So for most of those clients, they're spending a lot of time designing the data models, doing the integration, or so without replication of data to enable this to happen. And the answer is it's not one size fits all. Every client's a little bit different, every process is a little bit different, but that's a process that when the foundations is in place, is measured in days and weeks, not months and years, to do that training and get the system ready.
Sure. And the more detail you have, the better results you have as well.
Yes.
So, so it just trains the, the system better. So I agree. It really depends on the industry. When you're in retail, you're looking at weeks and days, and you're, the sales, and you're looking at, same day sales, we want sales comparable from year to year. Christmas doesn't fall on the same day every year, even though it's on the 25th. So, you have to look at things on a week-to-week basis. So, that's why they came up with things like the 4-4-5 calendars, and, and it acknowledges that, right? So it really just depends, just kind of, you have to evaluate your business, work with people like Jeff, that are implementing, that have that real time or real life experience, and what's worked best with other customers. I think we're doing I forget what it is. It might be actually a customer call that I'm going to next week or something like that. But we're talking about what other. No, this is the one that Jorgen Mueller posted on LinkedIn, where there's a new community that talks about what customers are doing with, say, HANA, right? How are they getting to the cloud? But if you think of that in the same thing, in the concept of like, how are people using AI, right? You know, look at forums like that and, you know, groups like that, you know, within SAP or outside of SAP, whatever, and see what other customers are doing.
I'd like to build on that with the AI aspect of it, and I think this is something that Jeff, you were talking about, is the exceptions, right? I think that with the technology today, that it's really a matter of that your accountants and your FP&A experts, right? Rather than spending the time and going through every transaction and doing things with the technology today, with the predictive and AI, that you can train the computers in order to pull out the exceptions, so that I now, as an accountant, am spending my time on focusing on what's important. So I'm not just the Excel jockey and going through and doing transaction after transaction over and over again. I train the computer to do that for me, so that now I can spend more time not being a computer and actually being a person and an accountant, to focus on those exceptions and see, you know, focus my time on what's important, as opposed to just being a computer and processing stuff.
You know, it's interesting because I was talking to a CFO last week, and the makeup of an accountant's changing too, right? It's not just looking at a person who has an accounting degree. They actually hired somebody who was more of a data scientist, you know, that can also understand accounting. And, you know, with that combination, you know, they can do a lot more now. So just evaluate, you know, who's on the team.
There's basically one thing which you said before, Floyd, that basically when you started, let's say, picking up on what Jeff was saying to answer, let's say, the question which was in the chat, which was, let's say, the more detail you have, the better it is. Right. I'd like to connect it to something you said, Elizabeth, which is all about basically the same, well, that we are checking out all of the individual transactions, but in an automated way, so we can really concentrate on the anomalies and the exceptions. So basically what I hear twice is, let's say, the more detail we have, the better it is. Before basically connecting this back to S4 being the basis, let's say, and the provision to, like, or providing a single financial truth, basically based on all of the individual transactions, I guess. So we're, let's say, well fit. And how does this compare now with, like, with classic EPM approaches, classic EPM solutions? And I don't have to look far. Let's say we can also go back to the BPC application we had before. So like how, like what's the real difference? Like, is it really better? How is it better? Not an easy question, I know, but it's like I'm pretty sure it's burning on a lot of tongues. So sorry for popping it up.
Elizabeth?
Well, I'm happy to jump in.
Stay so still. I'm like jittering around, moving around. You and Jeff are just like so posed. You would have to strap me down. It's the Latin in me.
So if you think about a tool like BPC, the very first thing, we put HANA underneath it and things got faster. So processes that went overnight or took days to get done now are happening in hours or minutes, but we didn't reimagine how we do things.
Right.
With SAC and the AI pieces, I started to say something else, but the AI components of that, it's the opportunity for FP&A and accounting to reimagine the role. It was touched on when Floyd talked about, you know, the CFO hiring an accountant with data science. I would argue that you need FP&A people who tend to be the best analysts in the organization, because that's what they do for a living, to partner with marketing or someone, because they need to become storytellers.
Yeah, that came up too. Yeah, that was a big thing at the conference last week.
Yeah, because
the ability to tell stories. Yep.
We drown in data. 80% of the data the companies have in control is dark because we're drowning in it. We don't know how to get to it. We don't know how to use it. You need data scientists in your team and tools like SAC for analytics and for planning that allow you to work with that detailed data in a way that makes sense. And not all that data is valuable from an analytics and planning standpoint. Some of it's just going to stay dark because it's just extra spreadsheets and other things. Right. But there's a lot of information that doesn't get used. And something that's different between BPC, for example, or the other older on-premise systems and a tool like SAC is, you know, we're working with a client now that we talked about Christmas is on a different day every year. Well, so was World Cup every 2 years, and the Super Bowl's on a different Sunday. And this particular client, those dates matter to them because their sales spike every time there's a major holiday or event because people gather everywhere in the world for those kinds of events. And so they're planning their sales and all their operating expenses by day and rolling that up into a month view so that we can show it to the world the way we're used to seeing it, which is on a month view. You can't do that in a tool like BPC because the data bogs the system down to where it becomes unusable.
Right.
That's the major change.
Yeah, there's a question in the chat, Jeff, which is right. I think you were almost answering it without knowing it, but explain the use of the live reporting with SAP Analytics Cloud. I think that's exactly what you were just talking about, how it's not a month view anymore, that you're not limited towards that month, the live view. I don't know if you want to talk about that a little bit more on the live reporting.
Well, they don't let me touch the keyboard as much as they used to. I've got gray hair now, and they're like, "Get out of here, old man."
You don't know what you're doing. You have VHS tapes.
Nothing wrong with cassette tapes. I got a couple of 8-tracks still
VHS,
too.
VHS, the videotape.
A use case for live reporting in SAC is if I am managing the business, I still have to hit my monthly and quarterly numbers. And the way reporting typically happens is I'm loading that data, rolling it up to a summary, I'm putting it into a tool, and I see that maybe daily, but usually at the end of the month. With live reporting, I can look at that at any point during the day in real time as the day is happening, compare that to my forecast on a day-to-day basis, if that's how detailed my forecast is. And I don't have to replicate all that data. I can see it as it's happening, whether it's a point of sale system and my data is available through a cloud connection, or it's an S/4HANA where I can see the actual individual documents that roll up into those financial results. And that's where we see clients using that kind of reporting because I don't want to wait for data to move. The worst thing about the microwave oven is we've all lost patience for things that take more than about 3 minutes to get done.
We've all lost patience for everything that takes too much time to get done,
Yes.
But I like that last point as well, because let's say initially when I was asking the question, like, okay, well, how is basically the current approach, let's say, of SAC on top of S4 with group reporting directly integrated different? I think you just, touched on a very important other aspect, let's say, the fact that we have access to this real-time information, just answering it from, let's say, well, the fact that we can do the real-time reporting, I guess, let's say, Elizabeth, because you talked about group reporting as the, let's say, embedded consolidation engine before. Let's say that we can also run, let's say, or use SAC as an embedded, let's say, real-time reporting tool on top of our, let's say, group level actuals, right? So it's like it's really not different tools and applications between which we need to move data, but it's basically this modular platform, let's say, where these three elements come very close together, if I understand it correctly, because I'm just trying to summarize.
Yeah, no, absolutely. Because I think this is back to the EPM world where you had a separate planning tool and you had a separate consolidation tool and you had your general ledger. These are sometimes all three of those could be from different vendors. So I think it's very key is the point that you mentioned that it's a modular platform. Okay, so that means that and not talking about licensing or commercialization, that kind of stuff, but the actual technology itself, right? So
and even at the same vendor, like at Hyperion, we had HFM, we had planning. Right. One was on OLAP, one was on relational, and you still had to bring them back together, right?
Yes, and they were different tools. So, and Jeff mentioned, BPC, the SAP Business Planning and Consolidation. I mean, it was a tool that SAP, was selling for a long time, but it had its own database. It stood here, the GL stood here. And in today's world with this modular platform aspect, you've got your S4, that is your ERP, and then group reporting is functionality in the ERP. So it's not a separate Hyperion solution. It's not a separate BPC solution. It's not, it's just using the technology that exists within that platform. And then SAP Analytics Cloud, which, yes, we've discussed, can be used standalone in its own world. However, the connectors that it has to that live data and the live reporting that Jeff was talking about is the technology that it's not a separate planning tool in that you necessarily need to pull out all that data and there are connectors. So there is some data that's stored in the in Analytics Cloud when you're using it with S4, but the beauty of it is being able to drill down to that document level, like Jeff was saying, but you're drilling down to the document level in the ERP. You're not replicating that document level into Analytics Cloud. You're not duplicating that data. Modular platform is great words to describe it, for sure. That it's one version of the truth, which I've been saying for over 20 years is when I moved first into software, but it really is one version of the truth now. It's you're storing all that data in memory, and then you're just tapping into it and planning on it and consolidating on it and doing calculations, but that it's all in one spot, right?
Yeah,
so,
it was one version of the truth at that time,
right?
because before it was, spreadsheet to spreadsheet to spreadsheet. Now you're like consolidating into another tool. So
right. Now talking about one version of the truth, so let's say which we do provide with this modular approach, maybe the most, let's say, annoying or difficult question, let's say, how do you then get to, let's say, or how can we help, and what are the aspects or some lessons learned perhaps on, let's say, how to define, let's say, a harmonized data model, because I guess that's what basically is then the baseline which needs to happen before, let's say tooling comes in. Anybody has some thoughts on that? Let's say how to get this to this like harmonized data model, because at least I've heard a lot of companies that are struggling with getting there, because there's typically different languages in different departments, or even within the same department. Let's say how many definitions of, for instance, the dimension country do you have, or certain KPIs like margin, like which margin is it, gross, net, something in between, etc., etc. So like some comments on that perhaps, let's say, and let's say also, let's say how technology perhaps can help.
Well, philosophically, our view is you want to start with the end. So before you start working on the data model, take a look at how you measure the business, because if you can measure it quickly, then you can manage the business. Yeah. And when you've done that, then you go back and ask the question, what are the other things that we wish we could measure that we cannot measure? Because there are going to be things that people ask or want to know that you can't get your hands wrapped around, can't get the data. That will then help you define what the data models need to look like that roll up into that. And I would challenge both IT and the business to hold on loosely. We're talking about tools, but it's a people, process, and technology puzzle. And the people, you have to herd the cats all in the same direction. They don't all want to move at the same time at the same pace, and they start to wander off to the side. And you mentioned, like, how many country codes do you have? Well, or how do we measure margin? Well, we do it this way. Well, could you do it this way? Well, maybe, but I don't want to. You got to try and reimagine and find a common ground between the people, because the tools and the process are the easy part. So, back to the question, before you start with the model, just take a long look at how you measure the business. What questions can you and can you not answer currently, and then work from there. It becomes very extensible, and it's not easy, but it's at least straightforward at that point.
Okay.
I don't know, Michelle, if you saw the question.
Part. Yeah, go ahead.
Question. I said there's an interesting question on chat right here. Leximo was asking, can you please explain the use cases of live reporting in SAC so BPC will not be required if we implement BPC? And I said, to me, I'm thinking, well, it depends what you're using BPC for, right? If you're using it for planning and reporting only, no, SAC can do that all. If you're not on S4, can you use group reporting? Yes, but if you're on S4, group reporting has a lot more power there, then you would need group reporting and SAC, right? So that's kind of, and correct me if I'm wrong, Elizabeth, but that's my understanding on the group reporting side. Did I get it right? Okay, good.
Yep, no, you got it right. So, I mean, again, it depends, is the, it's one of everybody's favorites.
I hate to say that, yeah.
Right, but I mean, it depends on how you're using BPC today. So again, it's the P or the C. So the Analytics Cloud, SAP Analytics Cloud, can do the planning and it can do the BI, the reporting aspect of it. If you're using BPC for the consolidation aspect of it, you would use group reporting. And
Right.
exactly to what Floyd said, yes, you can use group reporting as a standalone system. If you want to use it like a traditional consolidation tool where you're extracting information out of other, other ERPs or multiple ERPs, and you just want to use group reporting as a traditional consolidation system, absolutely you can do that. However, the power of using an S4 system and using the functionality of the modular platform, as we've been calling it, is that then you have that consolidation data in the same system, in the same platform. So it is more powerful. So yeah, it depends on, yes, you can use group reporting as standalone, but the power really comes from that whole live reporting aspect that we're talking about. So S4HANA can be used, group reporting can be used, SAC, yes, you can split them all up if you want to, but the superpower is when you put them all together and it's one platform and there's just modules as opposed to them being standalone. Because though, yes, they can be used standalone, but when you use them all three together, they're not standalone. If that, I don't know, can somebody else say that better than I just did?
Yeah, well, then you throw in success factors, right? For like HR planning, then you even got even a stronger system too. So now I can, plan positions and have it go back into success factors for the actual hiring process. And then when the person gets hired, it goes back to the plan with what dollars you actually hire the person at, right? So, it's a truly integrated system now.
Right.
Platform.
Oh, that sounds like a nice short conclusion, right? Let's say we have SAC, which is basically sitting at the top, let's say trying to visualize this, let's say with my small brain, let's say where we can connect, let's say our operational planning, our sales planning, our marketing planning, our HR planning, which you just mentioned, Floyd, let's say which all then typically gets together or translated into finance. The finance planning, which basically is then sitting on top of, let's say, our single financial truth, which comes with the S4HANA environment, not only on entity, but also on group level because of the integrated consolidation power, which we basically have in there. And that's basically the, let's say then the modular approach, which basically originally sounded like 3 different tools, just separate and needed to be interfaced. It basically really becomes a very powerful modular finance platform to, let's say, help the modern FP&A professional. That's what I learned from here. But in general, now basically because we have Jeff on the call, I definitely would love to, and I'm pretty sure a lot of attendees would love to listen into, let's say, some additional experiences, perhaps without necessarily calling out the, let's say, the customer names, but do you have some, let's say, experiences you can share, let's say, of companies that really have been grasping those benefits from this modular approach?
Well, I'll talk about one in particular. It's a multinational US company, at least headquartered in the US, but they're a multinational pharmaceutical company. And one of the most important things that they have to do, because they're really in that CPG space, is in their manufacturing process, they have cost of goods that come from a dozen different countries to go into a single product. All of those countries operate in different currencies. And when we do our forecasting, we're typically taking a number of units times a standard cost. And that gives us our basic cost of goods calculation. However, their variances are driven by FX impacts across a dozen different currencies in that one standard. And so the performance of their business relative to the FX was a really complicated challenge that we have used SAC to solve it. And they have the ability to go in, pull the data, pull the various FX rates and look at what they forecasted at, what the actual rates were. And they can now tell management, we hit our numbers or didn't hit our numbers because of FX impact or operations of the business. And now management can make better decisions in the office of the CFO about hedging opportunities to minimize that FX impact going forward, or to actually improve or change how they're managing the local facilities and plants to manage the operational piece. They were doing a facsimile of that in Excel, but it was way after the fact, and it wasn't driving all the things that they wanted it to do. It just was too slow, and it wasn't easy. A different client, also US based, is in an industry that actually thrived during COVID, because everybody, at least in the US, was doing home projects and home improvement projects. So that part of their business picked way up. Well, they didn't forecast that. And before we put SAC in place to do planning, they were looking at individual machines, and they had them bucketed in their ERP system in S/4HANA as individual cost centers. But all the planning from an operational standpoint was being done in Excel. And it took a large team of people to do all of that planning. And it took weeks and months to roll that data up to get one version of the plan. Now that they have SAC in place, those same people can generate multiple versions of the plan in a fraction of the time. So we've talked about the different things like supply chain and COVID, and when all these different one-offs seem to keep happening to us in the world, they're able to react very quickly because they have a plan that accounted for something like what the world threw at them, whether it was something in economics or inflation. They've thought about it. They weren't spending their time trying to make the spreadsheets work. They were spending their time planning different scenarios so that when something happens, they can just take action. And those are things we couldn't do with BPC and other tools.
All right.
Amen.
Thanks a lot, Jeff. Any additional questions from the audience, perhaps? Let's see. I'm not sure, Toros, Mark, whether we can unmute or otherwise in the chat.
Yes. Yes, you, if there's anybody that has any questions for our panel, please do unmute your line or raise your hand, and I'll call on you to unmute your line. And you can ask your question or type your question in the chat. I think most of the questions have been in the chat have been answered.
Yeah.
If you do have a question, please feel free to unmute your line. Pushpa, did you?
Yeah. Yes. So I do have a question. The question is this SAC used in the clinical studies planning?
It absolutely can be, unless you're doing something more complicated than algebra, which is almost all of the planning we do is algebra. Thankfully, I'm not good at calculus. So the real answer to that question is, if you take a look at the process and you can find the sources of data that you're going to be using to analyze, the tools within SAC can do all the analytics or most of the analytics in and around the clinical studies forecasting. And if you're going to drive that into financial numbers, it can be used to do that as well.
Okay. So did you have any experience in implementing for the clinical studies, the SAC tool?
So I don't personally. We've got a couple folks on our team that could talk to that in depth. Again, they don't let me touch the keyboard as often as I used to. Back when it was BPC, I could do all kinds of things that might bore most of the audience to sleep, but I was really excited about it in those days. But yeah, you're not alone in wanting to do that. And the way the tool operates, in our view of this, is we're going to have some expertise in your domain, but you're going to be the experts. And we're going to bring our understanding of what you do generally. And we're going to bring our understanding of finance and our understanding of the tool. And all of that together will become a people, process, and tool design to get you to where you need to be.
Okay. Thank you.
Certainly.
Right.
Okay.
Thanks for that. So let's say first brave question. Anybody else?
I think we've got a hand raised there. Gerardo?
Okay. Gerardo.
Yeah. Hey, everyone. Thanks for your time. It's been very informative, by the way. And I think this question was slightly answered, but just I missed, I think, a bit of it. So I just wanted for clarification. So it sounds like SAC can definitely replace BPC, but really for planning and BI from consolidation, SAC can't do that, or it can, or how is it that's when you need S/4HANA?
So I'll take that one. The consolidation functionality of BPC, right? And when I'm talking about consolidation, I'm not talking about like a central finance consolidation or anything like that. I'm talking about the actual accounting financial consolidation, right? Which means that you're doing calculation of ownership, you're doing intercompany eliminations, you're doing top level adjustments. Those types of things is not functionality that exists with an analytics cloud. So that would be with the group reporting solution. So to do that accounting financial consolidation, you would use group reporting. Now, that being said, you mentioned the BI aspect of it. You can also use Analytics Cloud with group reporting to do some of the more sophisticated dashboarding and making the reports prettier and all that kind of stuff. So SAC can be used.
And I guess where I'm going with it is in order to report to Wall Street, would that combination of group reporting and SAC meet the needs?
Yes.
Okay.
That's the short answer.
All right. Yeah, that's perfect. That's short and sweet. Thank you. Great. Thank you so much.
Thank you.
Okay. Thanks for that, Gerardo. If you guys have any additional questions, we've got several minutes.
Yeah, there's one more in the chat. I think maybe Floyd, if you want to take that one. How do you compare SAC and IBP in terms of sales forecasting?
Yeah, so two different tools, right? Integrated business planning is it's a tool that's actually custom designed for that process. There's special rules, there's details that are required from your suppliers, et cetera, to be able to run those simulations, right? We don't intend to even do that in the SAC, just like we don't do that in BPC. Now, if you're doing a lighter case of IBP, there have been customers that have kind of put a lighter version of it in SAC. Well, that's the case. You can probably do that in SAC as well, right? But if you truly look at what we have for integrated business planning, we're going to leave it there, the engine at least, right? And we'll probably use SAC for the reporting mechanism, and maybe to capture certain drivers that go back into the engine. So, IBP, from my understanding, it's not going away, right? At least the engine part.
Yeah, it's not. And we've got clients that ask the same question. So this is not unique. When it comes to the sales forecasting piece, it's a little bit of a choose your preference. What we're finding is that users, particularly in the sales and marketing arena, prefer the SAC interface. It's a little bit more intuitive, it's easier. And we're focused on that with one of our three kinds of demand, our market demand, or what we think we can sell. We then take that data and we'll, in our case, typically we're pushing that to IBP, and IBP is then running all the algorithms to determine, can we support that level of sales? What plants are going to manufacture it? Does our supply chain have the capacity to deliver that? And we get a feedback from IBP that tells us, here's what you said you could sell, here's what we can actually deliver, and we work towards consensus from a demand standpoint. And that gets away from the logistics piece, which is the other kind of volumes we have to plan. But we've got our sales volume, we've got our manufacturing volumes, we get to a consensus of what we can really do and deliver on. And that's how those two tools work together. On the sales forecasting specifically, it's a little bit of a preference, IT or business. I will tell you that if you already own one tool, I would start there. If you don't own either, or if you own both tools or don't either one, SAC tends to be preferred by the users just because the user interface is a little bit more easy to pick up and adopt.
Maybe one remark, which I also, heard, because I'm definitely not an IBP, tool specialist, but IBP is much more, geared towards, quantity-based planning. When we start, adding, dollars to it, then basically we end up more often on the SAC planning side. That's at least what I hear a lot, and it can be basically a combination. What I definitely also have heard from organizations across the globe is basically very much in what Jeff was laying out. It's basically that everything around, basically, can I produce, can I deliver the whole, capacity planning piece based on, manufacturing quantities, and sales quantities is basically what we typically do in integrated business planning as a tool, which I still find a little bizarre, because integrated business planning also might refer to what we call that FP&A at the beginning of the session, but that's basically more the, the holistic plan and integrated planning approach, right? So let's not get confused there.
Yeah, the naming probably isn't ideal, but yeah, that.
Does that answer your question, Absalom?
Okay.
All right, Toros.
Any other questions, guys? Any other questions for our panel? I see Laxma's unmuted.
Yeah. Hey,
Yeah.
Taurus. Yeah. Hi, guys. I'm Lakshma. So in one of my recent projects, we have S4 implementation for a utility customer. So they have it has HANA database, and also it has Oracle SQL Server, some other ADP processing system. So if I want to consolidate the data from all these multiple sources, can it be done using SAC?
Short answer is yes. And when you work with public utilities, you've got two kinds of accounting. You've got the accounting that is focused on, particularly if they're publicly traded, the markets. And I have to tell the markets in a GAAP basis, here's how we're performing. But when they do their public filings with the local governments, whether it's state, province, or et cetera, the accounting is done a little bit differently. And I would do some of that from a reporting standpoint in SAC, talking about the analytics. I don't know that I would use that to do my formal reporting to those agencies. I don't know, Floyd, if you would disagree with that.
No, I completely agree. I mean, it's every situation is different, especially by industry, right? So, I mean, and we have the tools in place to account for those differences, right? That can accommodate for them. I guess not account, but accommodate.
Yeah, let's say from a finance perspective, perhaps let's say a side remark, and I'm not sure whether it's, let's say, applicable for that specific industry based out of the US. We would need to check for that, but I also know, let's say, that we have a solution called document and reporting compliance available on let's say on the finance side, and that application is actually able to let's say to support you in, let's say, delivering regulatory reporting, tax reporting, different types of reporting, in also in different, well, specific electronic formats that need to be delivered. Because basically document and reporting compliance is a combination of what we used to call ACR, Advanced Compliance Reporting, and let's say document, well, basically electronic document submission. Let's put it that way, because there's a number of different elements behind. So let's say for really very structured, let's say official reporting, which you typically also need to submit in particular electronic formats, I would probably, let's say, also like say gear towards or look into that direction. That's just basically a little bit out of, let's say, scope for today, but I don't think it's an issue, right? So like, and then furthermore, like from combining different sources, of course, we can, as Jeff said, we can do that. I'm sure in SAC as we learn. So I hope that's also answering your question.
Okay, thanks for
How
that.
are we doing in terms of timing, Toros?
We have a few more minutes. So if you guys have any additional questions, now's the time to take advantage of our topic experts, guys. Any questions for any of our panelists?
So while we have a minute, if you don't mind, I'll share one other thing from a client that they started doing last year. It was a project where we replaced BPC for planning. And one of the things that they really wanted to do, and this is a technology manufacturing company, was people as their most expensive resource. And they want to use SAC to help manage the approval process for adding people to the team. Because the hiring manager is going to be looking at the forecast and say, yes, you can have these people in the forecast. So one of the things that we were able to do in that implementation that I would not have been able to do, at least not easily with an on-premise system, is we were able to take their approved headcount forecast and push that data into their success factor system to begin the process for getting positions opened and requisitions created in that tool. It still had to go through those approvals. It still had to go through controls internally, but it took away the, oh, I've approved it in the forecast. Now I've got to email somebody and follow up and fill out a bunch of forms. We got those tools to work together in a way that the FP&A process that everyone participated in that organization, or a lot of people did. It was a bottoms-up build, was then triggering the hiring process. Those controls didn't get removed, but it took one of the manual steps out of that process. And this is where, again, tools that work quickly, that allow you to create things like private versions, and once you get to a version that's approved, you can use that to trigger a lot of other things in the downstream system, so that your FP&A process is not just rolling up the numbers, but it's helping manage and steer the business.
Right, thanks a lot for that additional, let's say, example. I think those are really the most interesting, let's say, elements, like in my belief, that we basically can make things specific and practical. So if I don't know whether there's one additional question or not, and otherwise,
I had a quick one.
Maybe back to you. Oh, go ahead. Sorry.
Just is by any chance, well, after the call, will anyone be sending out like a one-pager, just something I could share with my team internally that kind of helps support the discussion today?
Well, what I could suggest is we basically have a blog post on this, which is not an exact one-pager, basically, which is, let's say, really talking about the integration between S/4HANA Group Reporting and SAC. We're working on a white paper document on this, which should be released soon as well. But let's say for now, I could basically point to the blog post.
That'd be great. Yeah, I appreciate that.
For us to send it over.
Yeah, I'll be sending out a follow-up email with all the links.
Awesome.
Also, the recording for today's session will be available to you guys, so you guys can listen to that. Just give it an hour or so for it to render, and it'll be uploaded.
Yeah, and also, I don't know if you're going to include that new integrated business planning or the extended planning demo that they do with SuccessFactors. I think it's a great vision, of how you can, basically budget for a position and going back into SuccessFactors and then it coming back, right? So that's part of that platform. That's even though those are two completely different systems, because SuccessFactors is a lot more than just planning, right? So and that was a component of it. That piece is getting retired in SuccessFactors, and SAC is going to be the mechanism to do that, or is the mechanism to do that now.
Okay. Great.
So,
and you can do it with WorkStream and the others too. So I mean, it just, it doesn't have to just be SuccessFactors.
Yeah. So I have one more question following the Gerardo. So do you have any pictorial illustration that is showing the data coming from non-SAP systems and SAP systems as well into SAC, and how it is able to combine operational planning and financial planning, and also produce the reporting showing actuals versus planned in the reporting format, something that, just to show it to business to excite them.
I think let's say, well, there's a lot of let's say material on this. We do have, let's say, kind of a picture which we often use that wasn't, let's say, especially for this, let's say, conversational call, left out. We didn't want to bombard anybody with slides, but we can definitely, let's say, send it over, and then you can always come back to us, let's say, with additional needs for further details. But
yeah, and use your sales guy. I mean, whoever your account executive is, if there's something that you want to help paint that vision, they'll be on top of it. They'll get the right resources out to get the other areas to look at if you're trying to paint the vision of how SAC can help the organization.
And Jeff, I think you also wanted to come in and step in with an additional comment, if I'm not mistaken.
Well, and the diagrams themselves, all I was going to say is they're not hard to put together, and we have yet to find a system that we have a challenge making the two systems connect. I personally can't share anything because most of our stuff is under non-disclosure. But if you do diagrams like that today, and you want to get the business excited and show them the art of the possible, whether you work with a consulting firm or you get with one of your AEs from SAP, those diagrams can be put together in short order. And then you can tell the story around that. And, whether it's what we do, the folks on the call who are in FP&A or in IT, you know, we have to be storytellers as well. It's not just FP&A accounting that needs to learn to be storytellers. We have to as well, because we're not going to get the systems in place if we don't get people to be excited. So I think that's a terrific question. And that's where we have to be trying to lead the organization from an IT and FP&A standpoint, is we got to get people excited and move them in this direction, or it's not going to happen. Or it won't happen for us, but it will for somebody else, and our company will get left behind.
So I'm getting real-time updates on my brother's surgery. He's having his knee replaced. So, and it's his first surgery, and he's a senior citizen now. He turned 60. He's my older brother, so I'm sitting there going, okay, great. You're a senior citizen, you're 60 now. Not just anybody that's 60 or older. I'm 57.
Awesome.
So I'm right behind him.
Hey, we have just a couple more minutes if you guys have any additional questions. In the meantime, I have put all the contact information of all of our speakers. Jeff, I didn't have your email. If you want to just put your email in the chat, so that everybody can have your email and be able to contact you guys. Any questions, any additional questions? I don't see any additional questions in the chat. Well, thank you all. I want to thank all of our panelists that took time out of your busy schedules to join us today. Great discussion. A lot of information was shared. I want to also thank all of you guys for taking time out of your busy schedules to join us. Please do reach out to us if hopefully we've answered all, if not most of your questions, or maybe raised a few new ones. You have all of our contact information there to reach out to any of our topic experts. And with that, have a great afternoon, evening, or morning, wherever you're located.
Thanks, everyone.
Thank you all.
Thanks, guys.
All right, bye.
Thank you.
Bye-bye.